Traffic Controller Bessent, Fed turns left, BOJ turns right. Recently, U.S. Treasury Secretary Bessent dropped what can only be described as a market bombshell. He openly criticized the Bank of Japan, accusing them of being too slow to act on inflation. What does too slow mean here? Simply put, inflation is already knocking on the door, yet the central bank hasn't taken significant action. Japan's inflation rate has been above its 2% target for over 3 years, but interest rates remain the lowest among major economies. So, Bessent bluntly told the BOJ, "It's time to raise rates." But that's not all, the real twist is yet to come. Bessent didn't just instruct his neighbors, he also had advice for his own team. In a rare move that crossed into the Federal Reserve's territory, he suggested that from September onwards, the Fed should cut rates by 50 basis points. In the U.S., decisions on rate hikes or cuts are strictly the Fed's domain. The Treasury Secretary rarely steps in so directly. It's like a company's CFO telling the production department exactly how to run their operations, a big breach of protocol. So why did Bessent do it? What's the real plan here? It all comes down to his strategy, which he calls Fed cuts, BOJ hikes. Think of it like a seesaw. One side is the US, the other side is Japan. In recent years, high US interest rates have made the American side heavier, attracting global capital and pushing the dollar higher while the yen kept sliding. But now, Bessent believes US rates have become a drag on the economy. Credit, real estate, and smaller banks are all feeling the squeeze. His idea: push the US side down by cutting rates to prevent a hard landing. At the same time, lift the Japan side up by raising rates. With wages and inflation climbing in Japan, higher rates could stabilize both prices and the yen. One push down, one lift up, and the seesaw shifts. This Fed cuts, BOJ hikes play could reshape the interest rate gap between the world's two biggest economies. The immediate effect? Money might start flowing from the US to Japan. Markets reacted instantly. Following Bessent's comments, the yen surged against the dollar, and many are now predicting the BOJ could hike rates as early as October. This unprecedented statement from the US Treasury Secretary is no casual remark. It breaks from tradition and aims to redirect the flow of global capital. For Ultima markets traders, the question is clear: could the nearly 4-month rebound in US dollar to Japanese yen be coming to an end? The year's earlier downtrend in US dollar to Japanese yen may be gearing up for a comeback. Of course, early entries carry both opportunity and risk. Ultima Markets will keep you informed on the world's major economic events. See you in the next update.